Delano, how are you feeling after Friday? And is there a sense that if there is going to be some selling, it could be long lasting?
Carl, thanks for having me, and great to see you guys all back together. Friday was, interesting because obviously we had the comments from Fed Chair Powell, and obviously the comments were direct and short in the saying we have more to go with raising rates. And I think the market wasn't expecting some of that, and that's why we saw such a drastic drop, right? And so you look at it, we still have projections, that were suggesting that rates were going to rise, just below that 4% through the end of 2023. And so historically, loosening policy early has never been a good thing. And so I think this is the right move, and I think the market was a little bit surprised by that. I think for the folks that are in these growth names, we've always talked about the volatility that's going to remain in the short term, and I think that's still there. Now, I think the overreaction on the other side would be to abandon these names. I think that's the wrong thing to do, especially in this time where you're seeing valuations re-rate, different things going on in the market. But that volatility is going to remain for the near term, and that's something that growth investors have to expect.
So in terms of sectors, if prices retrench, what's at the top of the shopping list?
For us and for me, I still like, and we were just talking about Apple, is how Apple goes, the market goes. I still like mega cap tech, and I always mention that. And part of the reasons why is, one, you have that insulation. You have companies that are actually earning. You have companies that in some cases are providing a dividend yield. And you have companies that in a lot of cases are cannibalizing, other industries. So, if we're looking at how tech is playing in cloud and different things, and obviously Apple with, their services growing, that's an area that I want to be involved in and still hold. So if you look at all the big names you have on the chart, those are areas for investors to look at if those reevaluated and retrenches go to further levels where they can actually buy with some of the cash they're holding and have not bid yet. These are some areas that, where, for me, I feel safer to look at in this sort of environment.
Okay, controversial question for you. Do you actually buy dips in growth at this point? I'm looking at, 3 months. MongoDB is up more than 30% in 3 months. Snowflake's up 40. Bill.com is up 30 in 3 months. And we've had this private equity sort of put in growth for a lot of these names. So if these names dip as investors get freaked out about rates going forward, is there value to be had here if you're a long-term investor?
Yes, John, I think 100% there is value to be had here. So, a lot of the names you mentioned, they're going to have more volatility attached to them. Their valuations are going to fluctuate a lot more. But again, it wouldn't be a great time to try too hard to time these areas. I think for a lot of younger investors and longer term investors, some of them are dollar cost averaging, some of them are trying to time the market and hit exactly bottom, which is obviously a very hard thing to do for a lot of investors. But I do think, as you mentioned, there is some value to be gained here for the longer term investors that are looking out further. Obviously, we know with higher rates, the valuations for tech and for growth will lower. But if you're looking out further, if you're projecting out a little bit further, understanding what you want to do with your cash, there's opportunities for in those names.